All right, what up, though? We are live. This is your boy Willie Styles in the building. Thank you all for joining. Everyone that's joining live right now. It is July 6th, 2020, 10 p.m. on a Monday. You know, we're here with our focus topic. Tonight's topic is that time we got financially literate. So we're going to talk about some financials, some money, other things. So definitely stay tuned. First off, we want to introduce our guest tonight. My team isn't here yet. I'm waiting on Clint and Sonny. Well, I think Sonny's going to be off today, but Clint, I think, will be joining us here shortly. Actually, looks like Sonny just got in early. Okay. You there, Sonny? Oh, we'll give her a second. All right, Dame, introduce yourself, and then we'll go around the room.
Y'all know me. I'm Silky D. They call me Dame, and I got my family here, actually.
Yeah.
No doubt.
What up, though?
This is my family.
Going on a Money Monday.
On a Monday, I like that.
Money making Monday.
Yeah, I called in Marvin. Yeah, I got money coming in.
All right,
you got to go online.
Yourselves to the audience. Marlon, you can go first.
Hey everybody. My name is Marlon Johnson, and then this is my wife, Erika Johnson, and we're here just to try to do our best to help answer some questions about money and educate some folks. Because the truth of the matter is, money matters. Why? Because money matters. It's just important to talk about. It's nothing to be scared of, nothing to run away from, nothing to do, nothing crazy. Money matters, and we just want to help you a little bit with that.
Appreciate that. Sonny, thank you for joining. I didn't expect you. I was just telling them you weren't showing up.
Well, I wanted to pop in because I didn't want to not show up. Even through the technical difficulties and stuff like that. It's been a long day. But I wanted to pop in and show my face and at least stay on for as long as I could until my son decided to come up here and, be a part of the podcast.
Right. No doubt.
Hey, Sonny.
So, hey, guys. Thanks for joining us and thanks for being a part of the show today.
Thank you.
All right.
Hey, Sonny.
I still got to do intro, so give me 1 second. I'm going to do that real quick. So, like I said, if you're watching this now, it is either Monday or it's a Monday night. So, if you're not watching us right now, you're watching us on demand on one of our podcast replays or on Google Play or Facebook Live for the video replay. So, definitely check out all of those sites if you want to listen to the replay for free. Also, we have merchandise. So if you have you want to get a GFT t-shirt, I have on my Protect All Our Boys Like We Protect Our Girls. I think Sonny has. You have a shirt on tonight, Sonny? Oh
no, I do not have a shirt on tonight. I actually wore my. Let me tell you about this one. Just because y'all can know what I'm dealing with. So I actually got one of my shirts, right, that I ordered. It was the regular logo GFT Radio in gray. Mm-hmm. So, it comes with a little bit of an odor, so I washed it. Do you know my daughter came downstairs with it on yesterday?
Oh.
Interception.
I said, I didn't wear a shirt. She said, it was in the washer. And I was saving it for Monday.
Right. See, you gotta go get it as soon as it's ready.
I can't even like out the package in the washer on her. Like just no.
Wow.
Well, if anybody wants their own GFT logo shirt, t-shirt, hoodies.
I keep telling her to go on the website and buy her own.
Right. The website is teespring.com/stores/GFT Radio. If you don't catch it down there at the bottom, it's over there at the top over here on the right-hand side for those watching. And any other time you want to catch us on our website, gftradioshow.com, or your favorite social media sites, GFT_radio on Twitter and Instagram, or GFT Radio on Facebook. All right. Looks like we lost Silky D, but I'm sure he'll jump back in once he's free. And like I said, Clint, I think he's going to be joining us a little bit later. So let's go ahead and get started. So like I said, it's a financial, well, actually, no, like Marlon said, it's a money, we just call it Money Matters.
Money Matters Monday, baby.
There we go. All right. So let's go ahead and let you guys go ahead and introduce the topic and get us back on track here, and let's learn a thing or two about some financial literacy.
Sure. I want you to think about your house. I want you to imagine you getting ready to build a house. And what's the first thing you would start with?
I know I'll be trying to find the land, but
Okay, you want to find the land.
But you probably want to figure out how much you're gonna spend.
Okay, that's part of it. Yeah. Okay, so let's say we done already figured out the land, we done worked out the mortgage. It's time to build the house. What's the first thing that need to be built?
Foundation.
Ooh, okay, we got two people. Foundation. Okay, because if the foundation ain't strong, what's gonna happen to the house?
Collapse.
It's gonna collapse.
Mm-hmm.
So everything you see above ground depends on everything that's actually below ground. And the stronger the foundation is, the heavier weight it can handle on a thing that's above ground. And so if you say, okay, that's the way I want to do it in my house, what would you build first for your financial house?
Anybody know?
Don't
all speak at once.
Y'all talked to me last week. I know the answer.
I'm gonna let them already. You got the clip.
Nah.
Yeah.
See, this is my answer.
So I can answer it.
Yeah, so that chat, private chat.
Right.
Okay.
I'll text you the answers.
Right.
Okay. So let's we sent. Okay. Yeah.
Who, me?
Yes, please.
Oh.
If you can. No, I was saying for you and me, sweetheart.
All right, go ahead.
Okay.
Myself. Sorry about that. So the foundation of the financial house is life insurance. You say, why? Why would I need life insurance? Most of us on this call we're either in a relationship, married, or we have children,
Mm-hmm.
right?
Yep.
So what would happen, God forbid, any one of us passes away with no money left to our kids so they can continue to live the way they're used to living, creating, having money for them to take care of their bills, take care of the house if you're married or in a relationship, not a relationship, but married. If you don't have life insurance, usually what do we see a lot on Facebook when somebody passed away?
GoFundMe.
Second job.
GoFundMe.
GoFundMe. I don't know what the intention of GoFundMe was at first, but it definitely is not intended to bury your family.
Not at all. Do you really want the thing that you leave that they know you for is a bill?
No, not at all.
And the question I would ask you, would you agree that the loss of income in a 2-income home, is that devastating to a family?
No. I mean, I know that's one thing that, a lot of people don't think about is that impact that would have. It's bad enough when the people are still around and one can't find a job versus the other. But when, like you said, when someone passes away, that creates a whole different challenge because they're not there to even pick up that slack. Now you have to definitely figure it out alone.
Yeah. So the truth is, there's some questions we have to ask ourselves. If I were to ask you, if you passed away today, do you want your family to live at a lower level, the same level, or a better level once you're gone?
Definitely better.
I second on the better.
Mm-hmm.
Okay. So I'm waiting on. I'll be honest. Anybody I've talked to, I've never heard somebody say, "I want them to be worse off."
Right.
And if you do,
There are some
get
petty
away from
people
those
out
type of
there that
people.
will.
There are some definitely petty people. We
I
don't want to
met
deal
some
with
in my
those petty people.
I met some people in my field who didn't care.
Wow.
Who waited for their parent to die, basically, so they can get their money.
Mm-hmm.
So I'm going to ask some questions. If we want our family to live better, and we've worked hard, and we're making an income, don't we want to protect it?
Yes, definitely.
Yeah. And so, first question one should ask, if you start thinking about when should I start thinking about life insurance? Is it too early? How long can you wait before you leave this earth?
Time for unforeseen occurrences befall us all. So you should start thinking about it yesterday.
Yeah. Oh, you in the book? I know you. Okay, Solomon. You on the tech, big fella.
Right.
Yeah, but that is the truth. The reality is life doesn't give us the opportunity to say, you know what, I'm just gonna wait. I'm just gonna hold up. Because again, if we're talking about the financial house and we say, you know what, I'm not gonna put this basement on this house. I'm just gonna go ahead and build it without a basement. What happens when the wind blows? What happens when the water comes? What happened when the ground tend to shake? What happened when, unfortunately, those things happen in life that we can't predict? Man, life is so difficult for the next generation, and really, that's where life insurance comes in. So, a common question people may ask is, how much should I have? And let me start here. Is life insurance just to bury somebody? What do you guys say? Is it just enough? Should you just have enough just to pay for the funeral? Average funeral is about $8,500. Is that enough?
No,
because it costs more sometimes. Depends what kind of. Excuse me.
You don't know if that person has debts that need to be paid.
Oh, come on with it, Sonny.
Miscellaneous things that people don't think about. I know when my mom passed, we had different things we had to deal with. Luckily, we were financially able to take care of. She didn't have like a whole bunch of debt. Some stuff was forgiven because it was school loans, but the stuff that couldn't be, that had to be paid for a while. I apologize.
No,
but okay. Those things, like you have to think beyond that. Like, and that's what I always say. You don't leave your kids with bills.
Right. Right.
And so just there's a saying: rich people leave wills. Poor people leave bills.
Mm-hmm. Yeah.
And so when you start talking about how much is the right amount, if you were to ask some of the other experts out there, like a Dave Ramsey or a Susie Orman, they would tell you should have somewhere between 8 to 10 times your income in coverage.
Wow.
8 to 10 times. And so if you just think about for a second, average family, you say, okay, no, I'm doing pretty good. I got, somebody might say I'm making $50,000 a year. And you say, okay, how much coverage do they got in life insurance? Oh, they got 30,000.
Mm-hmm.
So if you married, how many people got a house, got a car, got some credit card debt? Right. You might be having some kids getting ready to go to school. Now I'm just
in school.
I'm just asking.
Mine's just now going.
Oh, okay. Now, is the mortgage company gonna say, I'm sorry that your husband or wife died? We gonna go ahead and say, man, you ain't got to pay the rest of that both y'all signed for.
No, they're not that generous.
They're not doing that. They're not doing that. So one of the things when you're shopping for life insurance is to make sure you buy the right amount. So that would be the first thing. It should be 8 to 10 times your annual salary. If you're getting less than that, then you aren't what we would call properly protected. And so you leave yourself some kind of risk that if God forbid something were to happen, again, when they look at your picture in the family album or they look at that obituary, they're gonna smile for a minute. They're gonna be like, man, you know what? We had to pass the hat. You remember that GoFundMe? Man, I wish they would have bought the life insurance.
I hate the GoFundMes. Oh my God, with a passion.
I know, right? That is
like, and another reason why it's important to have life insurance and have enough coverage is, especially if it's like a spouse being lost, you don't want the spouse to have to go back to work on that, and they're grieving on top of I'm grieving and I don't have I got to go back to work. That's another reason why you want to make sure you have the right amount of coverage on both sides. So at least the person does get the chance, they pay the bills and they're not under this like intense stress because they're already under stress because you're gone.
Mm-hmm.
Right. So that's another way to at least help alleviate that other level of stress. Like they're gone and the bills piling up. They're gone and I'm going to have to move my entire family because we can't afford the mortgage.
Right. And that was one thing I noticed a lot of times with people who get only just enough coverage to cover funeral expenses, maybe some immediate debts, but they don't cover medical bills, because most of the time you're dealing with a situation where either it was a catastrophic situation. Now you have all this medical emergency room bills and ambulance, and maybe there's a property damage, things that you have to take care of, because of that kind of thing. Or on the flip side, if it was something that had been going on, like an illness, then you more than likely have mounted, again, medical bills have mounted up sky high. And then, like you said, the timing in terms of how long do you want to be able to grieve, or how long do you want to be able to not have to work or worry, not even just working, but just worrying about how you're going to pay those bills in that grieving process.
Yeah, that just exasperates everything. A family that's already hurting, they're the one that's usually, let me set up the GoFundMe.
Mm-hmm. Yeah.
That is so tremendous. And then think about, okay, they can't get the stuff taken care of at the funeral home, and then it's prolonging the homegoing. And then it is just something that is so painful that's avoidable with some planning.
Mm-hmm.
Okay. I want to drop another nugget. People say, how much should I pay in premium? How much is too much? Because you got to have some limits. Because you're like, well, I'm sure somebody can sell me 8 to 10 times my salary, but how much should I pay? So here's the formula you want to think about.
Yeah, I'm about to say that was what I was about to ask, because it would be nice to have 8 to 10 times my salary, but do I really want to pay for that?
Great question. Because listen, you already know that's always the question. Because a lot of times people will make the decision on what's the cost. So here's the rule of thumb: somewhere between 2 to 5% of your gross earnings a month. 2 to 5%. 2 to 5%. It should be somewhere in there. So your minimum is 2%. Your maximum is 5%. If you're paying more than that on a premium, unless you have some kind of pre-existing condition, maybe someone's a smoker. Still getting used to this thing flipping the side of everything being opposite on my screen. But unless you have that kind of situation, you should be able to cover 100% of your assets between 2 and 5% of your gross monthly income. If it's more than that, it's too much. It's too much. So those are a couple of guidelines when you're shopping and trying to make a decision, because the truth of the matter is you just want to be careful. Because listen, if it's something you don't know, here's one reason why people sometimes avoid this stuff, because they're concerned they're going to get ripped off because they're not informed. It's kind of like when you go to the mechanic and they be like, yeah, I don't even know how you made it here. Your thingamabob was just about to blow up, and it's God, man, dude, good thing you made it here. I'm going to replace your thingamabob and this. And you're just like, okay, how much? Oh man, we're going to do it for $500. Okay, cool. Swipe. And that's the feeling that we get because we're not informed. And so we're hoping that the life insurance professional is honoring the fiduciary responsibility that they should do. But yeah, you should be educated, because an educated consumer makes the right decisions. And then if they come back with some number that's weird, then you already know what you can do. No, we ain't, no, fam.
Yeah, definitely time to shop around. That's for sure.
Yeah. So, these are some questions that we kind of thought about life insurance, building on a firm foundation. And, here's the other thing about life insurance, just a couple other things to think about. Because question number 2 is, can't I just wait? Truth of the matter is, the earlier you get a policy, the better. Or you say, why? Because life insurance is about risk. It's about transferring your risk to the insurance company. And the earlier you get a policy, the less you pay. Because why? Probability says you're less likely to die. So the earlier you start your policy, the lower the premium. And so if the premium costs less, what does that give you the opportunity to do? Have more coverage.
Right.
But doesn't that also mean you can adjust things as time goes? Absolutely, you should. Absolutely, you should. Okay, what questions do we have, or concerns or comments or anything about the firm foundation of life insurance? Any questions out there?
I mean, I think that was my biggest thing, was costs, and I mean, and that's huge when you mention what it should cover. Being the 8 to 10 times, because a lot of people don't think about it that way, right? And I guess the only other question I have in terms of when you just mentioned about like pre-existing conditions and maybe being a smoker and that kind of thing. I know when I did my life insurance like 10 years ago, they did a medical exam, but it was a simple medical exam. It was like vitals, height, weight, blood pressure, stuff like that. Is that something that everyone must do for all policies, or are there options when it comes to that as well?
Yeah, so there are options that come to that. So I have to tell you, I have to be careful from how much detail I can give. So let me say this. So there's two. So one way is they can check medical records. That's one way. I caution against that sometimes, because if they only go by the record, you may not have as much latitude as if you have taken a paramed exam. You take the paramed exam, sometimes something in the record is old, and what's in that paramed is better, and it'll give you an opportunity maybe to ask for something to be reconsidered and stuff like that. And so that would just be something that I would say, and really it's not invasive. Typically you're talking about 15 minutes, a nurse coming to your house, right? Blood, vitals, and yes, they're gonna have you, give them the cup, and that's pretty much it.
Well, luckily for me, I didn't even have to do blood or the cup. I just had to do the base. Like I said, it was very, very basic. I had blood pressure, weight, height. They asked me a bunch of questions, like as if I was going to a first doctor's appointment, that kind of thing.
Absolutely.
But your point about old stuff, like at the time I had quit smoking, like I want to say it was 5 years before that. So I was able to put on my, record that I was a non-smoker. But like you said, had they been able to look at my old medical records, it would have showed I was a smoker, and that would have doubled my rate almost.
Oh, whew. Yeah. So the 2 to 5% is for someone that's really normally the only time like I said, only time I'll go outside of that is those pre-existing conditions. And so you have to, when you're starting to deal with that, you have to be realistic with kind of where you are and say, okay, so some coverage is better than none. And then ultimately you may need to go into a category of what we call self-insured. And so you say, well, what is someone that's self-insured? Somebody that's self-insured has found a way typically through investing to cover their final expenses because they've, maybe they had a pre-existing condition, and investment options will not be restricted by something like that. Because the only thing you got to qualify for is what? Life insurance. Right. Other investments, stuff like that, it's not a qualification in the same sense. It's more about suitability, but that's another conversation for another time. But that's just something. There are other things one could do to say, hey, this is too much, or I can't make this work. What you're hoping for is that the person that you're working with is thinking about not just selling you anything. They're trying to do what's in your best interest, and they're saying, okay, what can we do to get you in a position that's going to be best for your family? That's what you're looking for.
Right. Cool. Okay, I think we can go on to the next.
I have
I have a question. I'm sorry.
Yep. Well, not really a question, but kind of, sort of, not really, but I have life insurance through my job. So if I die while working for my job, I get 3 times my salary. No, 3.5 times my salary.
Okay. So that's good. Group coverage.
Yeah, so for me, I could get an outside insurance as well to cover it, but I already know if you're talking about 3 times my salary alone will cover funeral and the kids will be fine. 3.5 times my salary is actually even better. Okay. Because they'll be good. On top of that, they have my pension. They have deferred comp. I have deferred comp, so that they're already they're going to be some kids. They're going to be well off. They're going to have some money. And I even looked at my mortgage company sent me something out this that I can get insurance to them. That if something happens to me, they'll help my kids pay the mortgage.
You got to be careful with that, though.
I know. Yeah, I was about to say.
That's a great question.
Definitely. I mean, if you guys know about that one, definitely speak on it. I haven't done.
Because I saw it. I haven't looked at it to understand what it is.
That wasn't good coverage.
Okay, so I'm gonna two things. I'll talk about a little bit about group coverage first, and then we'll talk about the reason, which really kind of like a credit insurance kind of thing second. So with group coverage, this is the question now I would ask you, Sonny D. will you work at that job not to the day you retire, to the day you die?
I'm not pressing. I'm sorry. This is all new to me. I'm on my phone.
It's all good.
Probably not. Probably not. But even after I die, it's almost the same benefit if I retire.
Okay. So
it's a slight difference, but it's similar.
Okay. So typically with group coverage, and you may have something different, of course. So we always say if we don't have a policy in front of us,
I think that's probably why she has way better options than most of us. Because I group coverage doesn't work for me because it, like you said, I know I'm not going to work there until I die, unless God forbid something happens to me prematurely. But yeah.
And typically group policies pay out about 1% of the time. But so here's the benefit to group. It's very reasonable. Mm-hmm. Why? Because the insurance company says, man, you have this huge pool of people that we can essentially distribute the cost on. And okay, great. We'll insure these people for really next to nothing. Most of the time, a group policy, if it's not free, it's very reasonable. And so I would always encourage somebody, you want to take the group policy, you would want to take that especially if it's free, right? Mm-hmm. So the question I asked her was about, do you plan on working there until the day you die? The reason why is because typically it's an active payroll benefit, meaning as long as you're employed on an active thing, you're good. So what happens? I retire, I go on a leave, God forbid something happens and they terminate me. That policy that I once had with the company, I may not have it any longer. Now, in Sunny D's case, man, you're in a great situation if they allow you to take it. A lot of times what they'll do is they'll say, hey, let's convert that into a different type of policy. Mm-hmm. And that's where I would say that would be a question I would answer offline, because I would want to have some detail to say, okay, what type of policy are they converting it into? Because there are different types there's essentially 3 types of policies. And depending on the type, we will want to say, is that in the best interest for you? So that would be the first thing I would think of with a group policy. It's good to have. So then you say, okay, so is it in my best interest to consider owning something private? I would say yes, because then you're not subject to being active on the payroll with a company. So then, because look, God forbid something happened. Hey, this week, guess what we doing? We just doing cutbacks. Okay. And here's the other thing, and here's the other truth. Sometimes companies will sometimes make promises and then they'll retroactively change something. Mm-hmm. And then guess what happens? Hey, listen, we just changed it because we can't meet this obligation. And so I would say I would encourage someone to at best to mitigate something like that. So that would be my answer on the group policy. It's like I said, it's not bad to have, especially when they give it low cost, especially that. I would always encourage that, but I would say outside of that, you want something private. Now, on what she's talking about, the credit coverage is what she's talking about, is the mortgage company be happy to sell you a product where basically, hey, something occurs, you can't pay the bill, then we'll do that. You have some kind of hardship and we'll be able to do that. The challenge with that again is the likelihood of you using it. The reason why we believe in life insurance is just pure income replacement is really because that is an inevitability that's going to happen most of the time. So those other vehicles are out there. They're not always in the best interest of the client because of how unlikely it is to pay out. Yeah. That's really what it comes down to, the likelihood of it paying out.
Yeah, but just so I can clear, as far as I know, so once I retire, it is seamlessly almost the same benefit. So if I go on a leave, I'm still considered, because I work in HR, I'm still considered an active employee. The only way I'm not an active employee is if I retire, die, or something like that. Okay. But there's still a benefit. So the difference is more money because I'm contributing.
Exactly.
And what's happening versus me not contributing. But I think it's still depending on how long, so we have it like tiers. So if something were to happen with the state, like it did a couple years back, it's different tiers that we're on. So if you were hired past this time, whatever your benefits were going to be when you retire are still your benefits when you retire. Nothing changes. It's normally for they set it by a date. So if you got hired after this date, then whatever changes now affect you.
Okay. Yeah. I
So
guess
because I'm already invested in, I wouldn't be affected by any. Should not be. Let me say that would. I'm not gonna say wouldn't. Shouldn't be affected by any changes coming at any point after now.
Yeah, I love what you're saying. I love the way you're talking. Should not be tells me that you have the right way of thinking, which is I understand this situation is fluid and could change. And so therefore there are times I may need to revisit and reevaluate what I have. Because if there's one thing that sometimes, when you talk to somebody, you say, hey, are you interested in taking a look? No, I got somebody, I bought a policy 22 years ago and I'm all good.
Right.
Nothing's changed in 22 years. I know in 22 years, certain parts of my body don't work the same.
Right. Exactly.
The knees don't work the same. That back don't work the same. I'm not working the same, different situation. And so it would be important to reevaluate, because what you're trying to do is just be prepared.
And that's what I don't want to leave my kids with that. I'd rather leave them with money. That's why I set up the it's not a 401k, but it's like a 401b or something like that. So I have that, and it invests money for me, and then I have my pension, and then I have the life insurance. So I'm trying to make sure that there's some type of money there.
Oh yeah, you're doing good. I would say a consult. We'd love to do that offline. Talk later, and because really, here's the other thing about a second. Oh, let me say this, because here's the other thing. Sometimes people feel, they'll say, "Hey, I got a guy or I got a lady," and they feel this sense of, man, I'm being disloyal if I let somebody else take a look at it. So when you go to the doctor and they say you need this surgery, what's most people gonna say? I want a what?
Second opinion.
Okay, so when the contractor getting ready to do the roof on the house, you just take the first card, you go get a couple other estimates. You're probably gonna
get other estimates depending on what, yeah.
Because at least you want to say, is everything okay? So then what I would say is you're gonna end up with one or two things, and they both good. Either A, you're in the right situation. Stay with that person, they're treating you right. Hey, listen, they're doing good, stay there. Or we'll find out there's some opportunity, and then you might be able to get in a better situation. So how is that's a win-win? Either way, it's a win-win.
Yeah.
So that's what I would encourage. It's just sometimes we have, I know I've been with the person for all this time, and I have this sense of I'm being disloyal or whatever. But that's really, at the end of the day, it's your financial future, it's your house that you're building, it's your people that you got to make sure protect it. Okay, let's go to the main floor of the house. Let's go to that next part of the house. The basement's built. We didn't talk about that firm foundation. We got that. We have our life insurance, and now we need to start talking about what is day-to-day nuts and bolts. What should that look like on our financial house?
Sorry, I don't know what's happening. I keep pressing the buttons. I don't like at all.
You gotta be careful of them buttons on the phone, because it'll drop.
Yeah, I'm trying to exit out of the comments, the chat, and then it's no, you just completely out. I'm like, wait a minute, I didn't mean.
She's kicking herself out.
Yeah, that's what I'm doing essentially.
Yeah.
It's all good. We were talking about the main floor. So if you think about when you come to somebody's house, unless you got the man cave or everything set up in the basement, most of the time you're going to spend a lot of time on the main floor, because that's usually where the living room is, usually where the dining room is, usually where the kitchen is. And so once you have this foundation built, you say, okay, what's the next thing that I should be thinking about? The budget, the B word, the B word.
Yeah, when I bought my house.
Absolutely, yes. Oh, Sonny, you talking good, Sonny. You talking good.
No, that's one thing you gotta figure it out. But see, I've done it, but not necessarily the way that. So I went to a class. So they make you go to a class, especially as a first time person to own a home. They make you go to class to figure out this to see what you bring in and versus what goes out, and then try to figure out what you're doing, how you can save money. And I've done that, but not in the sense of how they had me write it out. I do it so. I see my check, bills, I pay whatever bills I'd be paid at that particular time, and how much money I have left over, and what I can, have spending money, and then what I gotta have in case the kids pop up and say, Mom, I need X, Y, Z, and I'm just broke. So those types. So I didn't do it in the traditional sense. I still have not done it. I said I was going to do it when I first got my house. I'm a year in and still have not sat there and did a budget for every month. but I'm still mindful of what I can spend, things like that. Like, because even when I did that, I basically did it where I wanted to be able to afford my mortgage with one paycheck before I bought the house. Like that's what I wanted to be able to do. And so as long as I could do that and still have money left over, I was good. So you can do that. Like, I felt like if I could do that, I wasn't putting myself in so much debt that I was going to be like, oh my God, what am I doing? I just bought this house and now I'm going to lose it. Like,
yeah. Think of you're kind of in a race, and debt. If the starting line is here, the more debt you have, it just pulls you back behind the starting line for you to even get to the even point to be able to start the actual race. And that's why the budget is so important, because the truth of the matter is you have to know really where every nickel, dime, and penny, where it's going. Because if you're not careful, the minimum payment monster will get you. If you're not careful,
I don't even play that minimum payment thing. Like, oh, you can pay such amount. No, I'm good. Let me pay what I'm about to pay.
Yeah, like we're trying to get this bad boy down. We're trying to
like, I ain't about to do no $25 minimum. That's what we're not about to do.
They ain't got no problem with you paying it 20 years now. It's all good.
Right.
They got no problem with that because they got that revolving debt. We good. Okay, so first thing is you have to have a debt, not for some expenses, not the only expenses you only want your wife to know about, you only want your husband to know about. You have to have a budget for all your real expenses. Real. Not I used to have a friend say he got money, free money, and money she don't know about. Man, there ain't no such thing as that stuff, man. You gotta have a budget with all the real active expenses that you have. And like you talked about, Sonny, the concept is at the end of the month, there's two questions. Am I at a surplus, meaning I got some extra money? Or am I at a deficit, meaning that next month, that starting line, I'm lining up further and further behind that starting line. And if you don't have a budget, just a basic way to start is how much coming in, how much going out. And then you can course correct. If you're not doing that, then necessities, wants, they'll get deferred and delayed, and necessities will get delayed, and that causes a significant amount of tension in any home. And so I want to kind of talk about just kind of like 3 accounts or 3 money pools you want to kind of think about. You want to build an emergency fund. An emergency fund. Hot water heater go out, refrigerator go out. Hopefully the credit card is not the first thing you reach for. There are times you may need to. Hopefully it's not the first thing you reach for. Hopefully we have some savings that's available. God forbid someone loses a job. Getting to a point where you have 1 month of salary saved, then 2 months of salary saved, then 3 months of salary saved. That's the next thing. And then short term, what are your goals and dreams? Because those are some things that you still want to account for. Because otherwise, listen, if you only working to pay bills, man, don't they get frustrated? I mean, if that's all you're working to do, if we're only working for tomorrow, and how do you look at that?
Say it again.
If you're only working to pay the bill that's coming tomorrow, how do you look at that job?
Right. Yeah. It makes it a challenge if you're just only looking at that one bill.
Yeah. And so learning to set aside and say, hey, I'm going to defer some gratification, but I still want, you may say, man, my little treat for myself is I still want to be able to get a haircut every 2 weeks. Or, you have to budget that kind of stuff in there. You may say, hey, I want that pair of shoes. Hey, I want that purse. And being able to have money in the budget for just those little small things along the way, it's nothing wrong with rewarding yourself and not feeling like all you work for. Man, I know DT about to holler at me next Thursday. You ain't working for that. That's not the only thing you're working for. So an emergency fund or short-term fund, and then of course the one commodity that we can never keep, that's always moving is time. You have to have something when you think about a long-term savings plan, because at some point everybody's going to retire. Hopefully, at some point everybody's going to retire.
Right.
Any questions or thoughts on that?
I mean,
no, but
when you talk about a long-term savings plan, I mean, I guess I'll see you later, Sonny.
Bye, guys. Sorry, I'm on mobile data. It's not great.
Okay.
Oh, okay. Bye.
Nice to meet y'all.
Yep, you too.
All right.
I mean, when you talk about a long-term savings plan, and I know a lot of people usually when they hear about saving, they're hearing save up for 6 months ahead, that kind of thing. But I know that there's also the issue of how do you work on paying bills and saving at the same time. What's the right strategy for that?
Yeah, that's a good question. So that's why. So the first thing is you got to know where you are. You remember back when you would go to the mall and you'd get lost and you'd walk up to the little sign thing. Used to be, if you went to Fairlane, the big triangle looking thing with the plastic all around it. And what's the first thing you look for? You say,
you look for the "you are here" sign.
You are here. Mm-hmm. And that's what you look for.
Yeah.
Because you have to have some kind of point of reference to get to wherever it is that you're trying to go. So your point of reference is what? The budget.
Okay.
And a lot of times people avoid it because they don't want to have this crushing feeling of, I'm blowing it. I don't know what I'm doing. Is there any kind of way out? But if you don't diagnose, are we bringing in, are we having extra, or is too much going out? If you don't start there, then you're not going to be willing to make the next action. So your next action is like, okay, cool. I've written it down. Boop. I'm seeing that, man, there's a big, oh man, at the end of the month, it's just not enough money. We're running out of money before the end of the month. Then you got
more. What is it? You got more month than you got
more
money?
month than money. That's and truth of the matter is the majority of families are in that position. Mm-hmm. That's not a small thing. When we work with a family and we get to doing what we do with a family, we see it go red most of the time. What does that mean? There's a deficit. And so what do we say? Okay, so we got some choices. Either you're going to cut your way to prosperity, but most of us, there just ain't enough to cut to make up $300 a month, $400 a month, $500 a month. So what is it that means that you need to do? You have to find a way to get more income. There's just no way around it. It usually is going to mean someone's probably picking up some extra hours somewhere. Like I said, you can only cut so much because once you cut to a certain point, you can't cut no more.
Right. Yeah.
What you gonna do? I'm gonna stop buying groceries.
At some point, you want to be able to, enjoy life, right?
Right.
Exactly. And so there comes a point in time where one has to say, I do need to find additional avenues or additional opportunities that's out there that'll help me earn additional income. And when you have a budget, here's the great thing about a budget. If the difference is like, man, maybe just a little bit, man, there's plenty of side hustles that's out there. There are plenty of things an individual can do. So I would say, again, the first place is, where am I at? How do I know where I'm at? I have to have a budget to know where I'm at, to know if every month I'm up or down. Then I kind of say, okay, I'm up or down. What do I need to do if I'm down? Then I need to, look at getting some more income. If I'm up, then I need to say, am I in a position where I'm saving in these different buckets? Right. Am I starting to work on my emergency fund? And so the reality is, it ain't going to happen overnight because you didn't get that situation overnight. So don't get frustrated when you're like, man, I only got $50 extra a month. Man, and guess where you started?
Right.
You say, if my monthly expenses is $1,000 a month, I know that's like, who spends that? Well, if that's what it is, you say, I'm going to take X amount of time to get that first bucket filled, which is my emergency fund, then my short-term fund, then I'm looking at my long-term fund. Because otherwise, if you build the other direction, you're going to start going into other money because I don't have an emergency fund. We'll make desperate decisions, and you all know what happens when you make decisions out of desperation. Those usually ain't good choices.
Right. Yeah, I mean, I know I've been in a situation before where I wanted to start saving, and I was looking for the best strategy. And one thing I did find was, like you said, was to slow but steady, right? And what I was doing was I realized basically each pay period, I would have somewhere around 20 or 30 bucks where it was, maybe I went to the store and bought energy drinks, or maybe I went to McDonald's and bought something to eat, or maybe it was, little stuff here and there. So I started to reserve that $25 and put it into a separate account. And I just, set my auto pay, my deduction.
Yes, sir.
Over there, literally $25. And I mean, just to see that first couple of months that, I had already accumulated 50, 100, you know what I mean? It started to inch up because I felt like, without a lot of effort, I was making progress, right? And then I just over time, as my salary increased or my bills decreased, I was able to add more to that. I mean, now it's to a point where it's a vacation fund that takes care of the 3 or 4 vacations I go on each year.
See, that's exactly what we're talking about. To do it in a way that you don't see it, that it just automatically goes there. And personally, I might recommend something like put it in an account you don't have a debit card for it, or you make it so it's hard for you to get to the money. Yeah. So you know what? I'm going to go by the fact that it ain't convenient, and that'll help you. Because if you can transfer easy, you can get to that money easy. Guess what you're gonna do? I really need this right now. I just listen. I got to buy the fight that's coming on Saturday. I gotta have it.
Right.
And then what's the first thing they're gonna do? They're gonna go and take the money out.
Exactly.
They're gonna go and take the money out. So yeah, I mean, I agree with you, honey. You got anything you want to add there?
Yeah, sometimes it's like you say, you got to look at your budget and see, what am I spending money on? Because you know how you just like, how much you make a month, and you're like, I know I make this much of money, like it's in my bank account every month. Why come I still got bills that's late?
Right.
Oh, because I didn't spend, like, Marlon and I, we like to have, at least like a little bit of money that's just ours. Like you could blow it, you do whatever you want to do with it.
You're
go have fun. Right. Go have fun. Yeah. Do you, boo?
Right.
But then when you're like, okay, I missed a bill, but I went and bought like lunch every day this week, like $20 every time. Oh, hey, there's that $100 I could have put on that bill. So yeah, it's like you do have to kind of go through your budget with a fine-tooth comb, and really, like Marlon said, you can't cut your way, but there's some things you can do, which is okay. I like to treat myself. Don't treat yourself every day. I'm still learning that. I'm just being transparent. Still learning. But you just try to cut down on those things and then see where that takes you. And that 20 you were spending on lunch every day, like you said, put it in an account, save it somewhere. Then you could take your whole family on a nice vacation on all them 20s you done spent or not spent.
Right. Exactly. I mean, like I said, that definitely helped me, especially like Marlon just said, not having access. That was the huge part about it. I forgot to mention that part. Like I said, it was a separate account, but not only was it separate, it was in a whole different bank. You know what I mean?
Yeah.
Like you said, I didn't have a debit card. I didn't have a debit card. I didn't have a direct transfer method between the accounts or anything like that. Because I have multiple accounts anyway, because I help my mom with her finances, so we can do transfers between accounts. But it's like that account is like stonewalled by itself. Yeah, like you said, it makes it so that I don't look at it every day or every like I just happen to check it every I would say maybe every quarter, maybe, and even then I might skip a quarter and wait 6 months just to see how it's doing, especially if I'm like right now during the pandemic, there's no traveling, there's so it's just growing and growing right now. So I got some big plans for it, but
you're like, man, when this thing over, we about to go tear something up.
Exactly. So, but I've been very good, at making sure that I'm not not hovering above it, right? And so, like you said, it makes it grow out of sight, out of mind. And then when it is time to use it, like every year, I have to pay so much on certain expenses. And when we get to the end of the year, I'm like, bet I can go in this account and the money's going to be here. Emergency expenses for the kids, go in the account, the money's going to be there.
Yep.
And if it's not there, that's fine. But it's most of what I need is there. Pull it out, drop it on whatever it needs to go on. After that, forget about it again.
Yep. Yeah, I mean, that's exactly it. I mean, and just think about the peace of mind that you have. Because just think about everybody lives kind of at the, you kind of, the main floor, you're there a lot. And so it gets a lot of usage. And then something happens, and that can completely disrupt and turn a financial situation upside down if we just didn't have some planning. So even the $20 a month, the $40 a month, it adds up over time.
Yeah.
And so it is a very comforting thing to know, hey man, instead of asking your friend to hold that $20 or $200, there's been many a times you go to them like, oh, it's $200 in there. Okay, cool. That was between living.
That's a way better feeling than having to go asking somebody for it or whatever the case may be.
Yeah,
that's true.
Yeah. Okay, so now we talked about our basement. Our basement is finished. We got the man cave, the she shed in the basement, whatever they say. Whatever they call them these days. And you say, okay, I'm thinking long term because foundation is built. We got an emergency fund. We got our short term. And now I'm thinking long term. What do I need to think about? And so you have to. Here's what I want you to think about. One of the things I think sometimes is sad is when you go to Walmart. Or I'm sorry, excuse me, probably take that out. You go to a big box store and you're saying, okay, hey, look, who's that working near the cart and they're greeting everybody handing out a paper?
Right.
That could be Nana. That could be my grandma.
Mm-hmm. Yep.
And then your question is, wait a minute, why is she working here? If you ever stop to ask yourself that question, why
is
she work? Because you're thinking, wait a minute, golden years, you thinking this person traveling, you thinking they keeping the grands, you thinking they enjoying themselves. Instead, it's Black Friday.
She working hard as everybody else.
She working hard as
she hustling.
Everybody else. And you say, well, why is that and what happened? Typically what happened is they did not have a specific plan for retirement where they could actually know the number that would allow them to retire. Because here's the hard truth. Retirement is not an age. It's not an age.
Right.
It's a dollar amount. So you think about what it used to be. Man, we love you. You've been working here all these years. Here's what we're going to do as a company. We're going to give you a pension. We're going to give you a lifetime of income because we appreciate the sacrifice and the labor that you've given us. Man, that age has been gone because they replace it with what? Different type of retirement vehicles. And here's what they say. You figure it out. Right. And hopefully when that time comes, you got enough. And why is that person maybe working in a situation they may not like to be working in? Because they took the advice of put this random amount of money in this account for this amount of time. And what did they come to find out?
Wasn't enough.
Wasn't enough. And at the time when they body, when they energy, when their faculties, that's not the prime time for them to be working. What do you end up finding the person doing?
taking that part-time job, taking some other kind of trying to do a craft, trying to do something to make money.
Yeah, and so that is, I would think after someone's work, because some of those people sometimes, if you sit and talk to them, they've been executives at places.
Yep.
Yep.
There are people that have had, if you just talk to them and ask them, hey, what did you do? And you say, man, you did all of this. And by no fault of their own, just by not having education and someone helping them say, let me tell you the literal number that you need to achieve to give you independence.
Right.
Let me tell you what that looks like. And without having that, they ended up doing it. They ended up back working. So this, I got to tell you, this is one of those categories you got to be really careful. Here's why. The regulatory authorities, FINRA,
yep,
SEC, can't talk about a product. So I'm going to be real careful. I'm not naming no products at all. We not
no, ma'am.
I'm going to be very clear about that.
No plugging, right?
Not at all.
No.
I'm going to be very clear about that. So I just want to just make sure. Here's the questions you ask yourself. Do you know how much to save? And you say, well, what should I think about? You should think about, because it's kind of a similar question to life insurance. Do I want to live at a lower lifestyle, the same lifestyle, or a better lifestyle when my working years end?
Okay.
And that's what you want to ask your financial professional. That's what you want to ask them.
Mm-hmm.
They'll make recommendations based on when they determine suitability for a certain product. They'll ask you questions to determine what are you trying to do, how are you trying to get there, and they'll make recommendations when they have data.
Mm-hmm.
That's what it should look like. It shouldn't just be, I go in there, they just, here you go.
They just throw something at you. Like, here you go.
Because remember, they have a fiduciary responsibility, meaning I got to essentially treat this money like it's my own money and do what's in the best interest of this person's money. That's the responsibility that the person has. So it shouldn't be a quick meeting. It should be well thought out. Right. They should be asking a lot of questions. They should be finding out, hey, where is it coming from? Who are you? Is this stuff legit? They should be asking you those type of questions. Why? Because they want to make sure you're in the right vehicle or the right product. Again,
and you're not money laundering.
Oh yeah,
you're not money laundering.
Yeah, that's important too. That's important too. And so,
darn, so I just can't call them up and be like, look, I need to launder some money, and no, I can't.
No.
Can't be old.
I need to clean.
Can't clean your money. Can't clean your money. Sorry.
Man, y'all taking the fun out of money.
And so just think about this. If you knew the number, just what would you do if you knew the number that you needed for retirement? Wouldn't that change the way either you save or might even change the way you live now?
Right. And I think that's the biggest thing is understanding how much you need to save for what you want as well, not versus, but in accompanying knowing what that number is and then figuring out the strategy to get there, right?
Yep.
Yeah, absolutely.
And that was one thing that opened my eyes about 8 years ago or maybe 9 years ago when I was with my second from last company. They had a really great 401k product or program rather, because they had gotten rid of the pension. Like you said, they had retroactively.
Legacy call. They just said, hey, we doing this. Here's the memo. Hopefully you read it. Click this button, say you signed off. Now you're responsible.
Exactly. So, and that was the biggest thing is that, of course, when they changed it, I fell inside of that space that they retroactively excluded. Mm-hmm. So I had to get, onto the 401k. I had to, like you said, figure out what I wanted to save out of my salary. And at the time, the tools weren't really there, right? And it was just like, oh, they're giving, I want to say it was like 4% or 8% match, and which sounded great,
Sounds great.
So whatever you put in, they would do up to that. And then it was like the vesting was a certain amount of years. And so there was a bunch of stuff that was thrown at us, right? But then, like you said, once I was in the program and I started to kind of, go in there every so often, like every 6 months, and look and see what it was doing, how it was doing, they started adding more tools. And one of the tools they added was the ability to see what your current, what they call it, your current contribution is versus what your estimated return in the future.
Oh, yeah.
Right. Yeah.
Now you're talking good.
And when I saw that, I was devastated because I had spent 2 or 3 years putting money into this thing and then realizing there was no way I was going to retire off of any of this. I was making a great return in my mind because it was more than saving in a bank, and it was more than investing, blindly in the stock market. But I still wasn't putting in enough into it or anything else in order to pad that future.
Oh man, you're so good because, all right, let's talk a little bit. I'm gonna hit on how the bank does what they do, and then I want to hit a little bit on your kind of situation. So what the bank does is they take your money and they take it, and what do you think they do? They go and then they go and invest it. And that's why they can give people low rates of return, because it's conservative and it's safe, and they do that. And the challenge with them doing that is that rate of return that an individual gets on something like that, yes, it's going to grow because it's going to be more money it was than when you started. But is it, like you said, going to get you to where it is you're trying to get to? Because here's the one thing it can't outpace. Ooh, just because, let's say, for example, whatever their rate of return that they're giving you is less than inflation. If it's, just think about this. I'm giving you pennies, but it's less than inflation. So by the time you ready to get whatever that product is, guess what's already ate it up? The cost of living.
Cost of living, yeah.
And so one of the things when you get ready to sit down and start thinking about this kind of stuff is what level do I want to live at? But what's stuff gonna cost? So if I sent my son to the store right now with $20 versus when my mom sent me to the store with $20 in 1989, I'm probably coming back with a lot more in 1989. Right now, he probably could get what? Milk, a loaf of bread. Hold on, you might get a pack of bologna,
right?
And the small bag of chips,
right?
But when I went to the store, what did I get for $20? You had the glass bottle Faygo, the 59-cent one. That you had the bag of chips. So for $2, you was like, man, I'm a king up in here. And there were several things that you could happen. So that same money now is going to get a much smaller, going to do a lot smaller, a lot less of buying power in the future. And that's one of the things that if you're just giving and getting a nominal, a small rate of return, we don't think about, because we're like, oh man, it's growing. And that's what it makes it. Well, I can chip you off a little something because, hey, I'm getting 12%.
Right.
Of course I can give you 3%.
Right.
And then think about this other rationale. You say, okay, like you talked about kind of your situation, company was matching. Cool. Great. But then you came and find out it still wasn't going to be enough.
Right. Yeah.
If they were going to match, why would you get rid of a pension?
Right. Yeah, exactly.
Because at some point, how is it benefiting you when they're saying, well, I'll match at this, X percentage. That's because the other 90% they're not paying that.
Exactly.
Yep.
Yeah, because with the pension, it was like 60, 70, 80% of, that kind of thing, on top of the fact that a pension pays on and on versus the 401k contribution, they only have to pay into that while you work there.
Yeah.
Yep.
So again, you just have to understand the paradigm shift happened when it was like, wait a minute, we don't want legacy costs. We really are more concerned about what's going to the bottom line. And when an employer thinks about you as an expense, they treat you the same way you treat the kid that comes mow the lawn. Are you paying for the most expensive kid that say I'm about to mow your lawn for $50? Or you want that one that say $20?
I want the one that say 5.
10.
Okay. So you know what the most popular pizza is right now? You already know what it is.
Oh yeah, the $5. The $5.
Now, Cotton Ready. Now wait a minute. You can go ahead and make something else. But when it comes time to feed that carload of kids, what you buy?
Right. I'm gonna get that. I'm gonna get that Little Caesars.
I'm thinking $20. I got 4 pizzas.
Exactly.
If we really big time, and we might spring for some crazy bread. If I'm really
exactly. Right.
We might go $30. Get a crazy bread to pop. And so the thing is, when the employer thinks about you as an expense, what are they trying to lower? The most controllable expense in any company is payroll.
Exactly.
And legacy cost. I mean, you just have to understand that. I'm not trying to, throw shade on companies. You at least should know what you're getting into.
Mm-hmm.
So that way, when that situation comes up, you know how to handle that kind of stuff accordingly.
No doubt. No doubt.
Yeah. Okay. How much time we got? Will, I feel like we've been going over a little bit here.
Well, we usually do an after show topic, but this is a pretty good topic. We can keep going, finish it up, and if we have time, we can do a little after show talking after that. But yeah.
Okay.
We got time.
Okay. So the next thing is, so we've built our foundation. We've built that, main floor. We built that second floor because, like the investment is kind of like your second floor, like the bedrooms and all that stuff. And then we're going to build that next thing. Start talking about, we need to start helping somebody else build their foundation. Okay. Well, what does that look like? You got to start helping the kiddies plan for college or, post-secondary education because you want to help them get off to a good start.
Wait, they're already getting my life insurance. I gotta give them college too?
While you're alive.
Oh yeah.
That's crazy, man. I don't know. Y'all talking wild now. I don't know.
Like you want them do you want them at your house for the rest of your life? Don't plan for college.
See, what's supposed to happen is every year the age limit's supposed to go up. So people can't come in your house unless there's a certain age limit. That's so right. Every year your kids have a birthday. Hey, happy birthday. The age limit went to 10 to 11. If you less than 11, you can't live here, okay?
Right. Exactly. like that.
A beautiful moment that you're like, man, I love you so much. Hey, I'm happy to help you move into the new place. I love you so much. I paid for the U-Haul. That's right. You want to get to that point.
More than willing to help you.
So the truth of the matter is, man, there's going to come a point where you want to help build somebody else their financial future, and you want to invest in somebody else, definitely your children, or it might not be your children, maybe somebody else, and you just want to avoid things like them starting behind the line. You don't want them to have student loans if you can help it. If you can help it, right? You want to give them access to education because that is one means by which you can help them improve their life. And then you want them to be able to account for like their expenses and or even offset some of the costs of the expenses because the scholarship may not pay for everything.
Right. That's what happened to me when I was in school. I got a 4-year ride to a university, go green, and then when I got there, realized I still had to pay for books, for room and board, for you know what I mean. So there was some, like you said, there was some extra costs involved that I really didn't think about, and ended up with a job. So
right.
Yeah. So those are all the kind of things that you say, okay, I want to avoid that kind of stuff. And then the other thing to think about, you still want to keep your financial house intact while you're doing construction on somebody else's. I mean, it just wouldn't make sense to, I want to tear down all this stuff I spent this time building and then start building something else while the house that I'm living in right now is deteriorating. That just doesn't make a lot of sense to do that.
Right. Yeah.
And so that's why you want to plan it. There are different vehicles that are out there that can help you. Again, I can't really get into product specifics, but there's a lot of different things that are out there that can, be done to plan for that. Right. Like I said, invest in somebody else's future. Those are just things that you just really want to kind of think about.
No doubt. Yeah, I mean, and I like the way you say, if you can, because I think sometimes as parents we feel like we have to, right? And it's important. I mean, I definitely want to stress the keeping your financial house intact because there are certain situations you do get in where you can't put a foundation on your kids' next steps. Unfortunately, right?
Yeah.
You can plan that ahead of time. It helps, I think. We did that with most of our kids. We started, state-run plans that, we were able to, put money into over time. I know there's other options that are out there, but that's something that we were able to do, again, because we had the ability to and not putting ourselves in the hole trying to do something we thought we absolutely have to do, because I know that, when it comes down to it, as young adults, if we train them right financially, definitely passing this kind of information along to our kids, being able to get them to start thinking about their finances early, they can start building on their own lives. And then, they may have to take a loan or whatever the case may be. If we can't afford to do it for them, then they'll learn how to, pay those things off over time or reduce the amount of time, as well as, secure their financial future. Because, we do want them to be better off than we are. In the long run.
Yeah. Like if I'm thinking correctly, like, Marlon's saying, not tearing down your financial house. You don't want to tear things up, like dip into your retirement plan to fund your kids' college fund. That should be a separate, a totally separate entity. So you don't have to dip into other funds to do that.
Yeah.
Yeah. Because you're borrowing from tomorrow. And the truth of the matter is, tomorrow's coming.
Yeah. Sooner than you think, right?
Oh man, sooner than you think. I swear, 10 minutes ago I was like 25. I swear. Me
too. I mean, maybe 12 minutes ago, but that's not right there with you.
So I hear you. So okay, so we right now college planning. You want to kind of think of that as the attic. You're probably not spending a whole lot of time there. It is a piece of your house. And then you say, okay, what else is important? Well, you got to put a roof on it. You got to put the roof on it. You have to have it. And what's the roof? It's when you start thinking about protection. The purpose of the roof is what? It protects the contents of the house. Think about this. Regardless of the height of your house, because you may not have an attic, maybe you got a crawl space, so to speak. You still need to make sure you got a roof on the house, because otherwise what's going to happen? The contents of the house are going to get damaged. So it's important to have some things in place so that one of the ugly things that happens when somebody dies, the kind of court you don't want to have to be caught up in. You don't want to deal with probate court. You don't want to deal with
fighting.
Man, because the first thing that happens, the phone call, blah, 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 pass. Oh, I got to get over there because I want the man. So many families face terrible things because the wishes of the individual that passed were not known and clear and understood. And so not only do you not want to pass debt, you don't want to pass this frustration. Because again, you would hope that at the time of the homegoing, it's a celebration of life. That's what you're hoping. It's this time of peace and this time of I'm remembering this legacy and I'm honoring and celebrating it. You don't remember that. You don't remember it's the time that almost got into a fist fight because somebody said, "Man, I'm about to take Man, yeah, exactly." Or I think I heard you say somebody saying they couldn't come to the funeral because that stuff happens. Yeah, that stuff happens. Before the man, I hate to say the person ain't even. It's gonna be me.
They're not cold in the ground yet.
They ain't even cold in the ground yet, and people fighting over. Oh man, you had that Lincoln, man. I'm about to be pushing that Lincoln.
Exactly.
That kind of stuff is so divisive in a family because there's somebody thinking that's that time for that come up, and that really, that's one of the things you want to think about. You should say, "Do I need a will?" Well, ideally, everybody would have one. Ideally, everybody would have one. Why? Because that is what speaks for you from the grave. I mean, it says, here's how we're going to distribute stuff. Here's who will be the guardians of the kids. It should be very clear. It should be very precise. People should have that because otherwise, here come the infighting. You say, okay, what about, is there anything else you should consider? A living will would be something to consider. Living will is what deals with medical treatment. Sometimes there are difficult decisions, and even that's something else that makes an issue in a family. Will, you talked earlier about a lot of times by the time you get to a certain point, hospice is coming. But what if the person says, you know what, I'd rather be at home? And so you don't have to make that choice. Maybe they say, I want some in-home care, or there's certain procedures I say do this or don't do this. Those are things you want the family to know. It would take a lot of difficult decisions out of there. So if we're talking about putting a roof on it, Those are other things. Also think about things like a trust. That's where you basically have a third party that will hold and make decisions about assets, especially when you're dealing with like kids and things like that. They do that on behalf of the beneficiary. That's something that you want to have that in place. And again, those are the kind of things that give you peace of mind as you're building your financial house, that give you that protection, but it also helps you to say, you know what, I'm getting my house in order. So God forbid that inevitable thing, man, it's appointed unto man what? Wants to die. Death by appointment. It ain't like you can avoid it.
Right. Yeah.
Yeah. Another thing also with the will and trust, and you want to have a power of attorney, because sometimes the power of attorney is, even though they say like the spouse can speak and whatever, it's best to have that in writing. Because every time every time I've been to the hospital, they ask, do you have a power of attorney? And they give you the little paper. And there's a reason for that, because if you come in and you're incapacitated, or, not necessarily you're incoherent, they need
just unable to convey your wishes.
Yeah, convey your wishes. You need someone there to be able to say, yes, that's okay. No, that's not okay. Like with the living will, but this is even before the living will. It's along with, but it's before that. Just in general. Yeah.
Yeah.
Yeah. So those are just, I'm
or your advanced directives, they call it as well.
Yeah, advanced directives.
You just want to make sure you have that stuff in place. I'm hoping that with our conversation tonight, it would make people say, I can do this. You know what I'm saying? Like, I can do this. It's not something I have to be afraid of. I don't have to leave it up to chance. I don't have to, put my head in the sand and act like tomorrow not coming. You just want to do your best to be prepared, because at the end of the day, you can still be, there can still be a blessing that you provided care from beyond the grave. Just think about this. You can still care for your loved ones beyond the grave.
Right.
By taking the time to plan and make sure people know the plan and it's clear. And, again, it's a sudden traumatic event most of the time, a lot of the time we don't know when it's going to happen. It's going to happen. And you can do some things to make it a lot easier. And so other thing I would encourage somebody, man, you want to get in the game, so to speak. Wherever you are, there's a starting point. You got a benchmark. But there is help, so that you don't have to have this feeling of, man, it's out of control. I don't know what to do. There's no way to start. There are people that can help you. You don't have to feel like you're doing this kind of stuff alone.
Right. Yeah. That's definitely, I think a lot of times people, they're not sure what to do. They're not sure how to proceed, or they don't know exactly what they need or how to do all the things. I mean, this list right here alone, speaks volumes to things that people may not think about or may not know how to take care of. So yeah, having that help is definitely important. So I definitely put you guys' information down there at the bottom. So anybody that wants to reach out to Erika and Marlon, they can definitely help you to get some of these things in order, get some of the information that you need, and maybe even talk about some of those products they weren't allowed to talk about over the thing right now. But like Marlon pointed out several times, a lot of times it's because they need data from you. They need information.
Yeah.
So they can help you and personalize it for you. So definitely.
Yes.
Yeah, everybody's situation is unique and different. And the goal is to get what's best for the client. I mean, if you do right by people, the business will follow. I mean, people will refer you to other people just the same way they say, man, the first thing you do is when you get that food and it's slapping. The first thing you do is you start texting, taking pictures, posting, going on Yelp. Why? Because it was just that good. You're like, if it was good for me, you need to come get you some of that. That's the same way that our philosophy is about what we do and how we help people. If we help somebody and did a good job for them, I don't need to hard sell, push price. We ain't got to do all that.
No.
Because people that have benefited and been treated right, they're going to tell somebody else. Just like the opposite. Treated somebody really bad, they're going to tell somebody else.
Right. Right. Exactly.
Okay, honey, you got anything you want to add? Sorry, I feel like I was talking all the time. You're like, that's just how I go all the time. What you
Right,
talking
that's normal. What are we talking
Monday.
about?
He's like, that's just a day in and out.
Bro, you
But it's not in a bad way. That's not in a bad way. That is normal. That's just he's very knowledgeable, and I can sit back and throw my little 2 cents in, and I'm good there. I'm good with my 2 cents. Okay.
right.
No, that's pretty much it. I love helping people. So if there's anyone that's like, I am lost, I don't know what to do. I want to do the right thing. Because some people is just, I want to do the right thing. I don't know where to start. I've got bits and pieces here and there. Can you help me organize my bits and pieces?
Right.
Would love to. Would love to.
We would love to. That's what that's our goal. Our goal is to help people. I mean, that's what we do at the end of the day.
Yeah.
No doubt. We appreciate that. We appreciate y'all giving us all this great information, helping out our viewers. We had a lot of viewers that stuck in here and listened to all the great tips. So hopefully they take down your information, but we'll definitely put the information in our summary so that anybody that needs to come back and get that information, they can grab your website. So I'll put your websites on there so people can come in and get that information directly from your website.
Beautiful. We appreciate you inviting us. I mean, this is just, thank you for having us for a Money Matters Monday, man. We love stuff. This is good stuff.
Yeah, no doubt. Yeah, I mean, and it's important too, because like you said, I mean, there's a lot of people who need this help who don't really know how to get to their financial goals, or don't know how to bring about financial success for themselves or their families, right?
Right.
And this type of information is it's out there, but getting to it is the challenge.
A whole nother.
Yeah.
Yes, sir.
Getting to it and making it understandable, for most people is where it's like
right.
Where the disconnect happens.
Yeah, exactly. Well, if you guys don't mind, I would love to bring you back in a couple of months or so to do this again with us. Maybe we'll have some more questions. Definitely want to answer some different questions for folks.
Sure.
Well, we won't try to get too late again, but if nothing else,
Money Matters on Monday.
Money Matters Monday.
We definitely want to do that. But if at any time you want to join for any of our other topics, definitely come back. We always have a great topic every Monday. On Thursday nights, we have our just basically a free for all. It's our social chill. So definitely come back for that as well. And kick it with us, chop it up with us. So.
Oh, that sounds good. I got somebody I know we're gonna bring on the next Money Matters.
Oh,
I got somebody that's gonna talk about the big C. They're gonna talk about credit.
Oh, no doubt.
I got somebody for you.
Oh, she is fired.
Yeah, I got somebody for you. Ooh, okay. Yeah, we're gonna do this again.
No doubt. I'm looking forward to it. Well, I think we're going to go ahead and cut it short. We still got 8 minutes technically, but no use in drawing out the inevitable. I do want to remind folks, definitely check out the comment section if you don't get the information now on how to contact Marlon and Erika. I will put their websites down in there on both Facebook and on YouTube, so definitely check that out. In the meantime, any other last statements before we get off the air?
My statement would just be really, again, I would just encourage you. Everybody starts somewhere.
Mm-hmm. No doubt.
Do not let the mistakes, the shame, the guilt, the worry, the anxiety, the heartache, the discouragement, the frustration keep you from taking control, because you have a lot more control and say so than you think you do.
Right.
But it doesn't begin until you make a choice to say, wait a minute, this ain't running me. That's that. No. The tail ain't wagging the dog.
Right.
The dog is wagging the tail. And so I need to say, what do I need? I need some help.
Mm-hmm.
I need some help. And if you're in that posture of someone that's looking to get help, it can make a significant difference today, tomorrow, and in the years to come. That would be the last thing I want to say to anybody listening.
Yeah.
Appreciate
My
that.
thing is don't let your pride tan your hide. Don't let
No doubt.
don't let your pride make you walk around like you've got it together and you got toilet paper on the bottom of your shoe.
No doubt.
Don't do that to yourself. It's okay. It takes a stronger person to admit they have an issue than the person who don't. So don't be that guy or girl.
Mm-hmm.
No doubt.
That's my closing statement for tonight.
Appreciate that. Appreciate that. Well, once again, everyone that's just got here, we've had Marlon and Erika, some financial experts on with us, giving us some great advice, giving us some good guidance. Contact them if you need any help. Watch this show again if you need to. It will be available free on demand 24/7 on Spotify, iHeartRadio, Stitcher, Google Play Music, Apple iTunes Podcast, SoundCloud, and Blog Talk Radio. Will be on all of those audio only. Come back here on Facebook or on YouTube and watch the live video. As always, you can get our merchandise, teespring.com/store/GFT Radio. Support us while we support you. And as you can see, we always have great content to support the community. GFTradioshow.com. That's our website. You'll get all of our links, all of the connections to all of our information, including our social media sites, GFT_radio on Twitter, Instagram, as well as GFT Radio on Facebook. You can catch Sunny at I am Sunny_D at on IG, Snapchat, Twitter, and TikTok. Definitely check out her TikTok. She's the queen of TikTok right now. Or check her on her blog, unreservedlyme.com. Unfortunately, Smooth couldn't make it here tonight. He ran into a couple of issues, so he'll definitely be on Thursday, I'm sure. So you can get at Smooth at King's Truth 609 on Instagram or Trenton Groomy on Twitter, as well. I told him I was going to have this done today, and I didn't do it. You can also get him at TikTok at A King's Truth or on his website, akingstruth.com. All his links are over there. I am Willie Styles. You can get at me at Willie Styles everywhere. IG, Twitter, and TikTok. I'm Willie.Styles on Snapchat, but I don't post. So you can get at me at one of those media sites, or you can check out stylesradio.com. You can get all the latest, hottest music that I listen to on a daily, weekly, and monthly basis, or check out williestyles.info for all my links. Once again, thank you all for joining. Thank you both for being here with us tonight. Appreciate you again. Much love. And everybody have a good night.
All right.
Good night.
Man. Appreciate you.
Thanks.
All right.
See everybody in a few days for Social Distance and Chill. Thursday.
Oh, wow.
That sounds good.
All right. No doubt. Peace.